Palantir Technologies continues to set new highs for the year, nearing $50. But is it too late for new investors to jump in on this stock? And will current investors face challenges ahead? This stock has surged an impressive 20% just in October and is now sitting pretty at just 3.5% shy of its all-time high. Palantir's recent earnings report was outstanding. Revenue increased significantly. To put some numbers to this, Palantir reported a 27% year-over-year increase in revenue, reaching almost $700 million. Now, they're not just resting on their laurels, they're expanding their AI applications across various industries. From healthcare to defense, their AI platform is proving to be a game changer. It's like they've got a crystal ball, showing businesses how to operate more efficiently. And let's not forget the prestigious S&P 500 club. Palantir just got its golden ticket, joining the index. This isn't just a pat on the back. It means index funds and other big players have to buy in, giving the stock price a natural boost. Being part of the S&P 500 also adds a layer of credibility and stability to Palantir's profile, which can attract more conservative investors. Lastly, the analysts are all aboard the Palantir train. They're upgrading their price targets left and right, which is basically Wall Street's way of saying we believe in the company's future. For example, Wedbush analyst Dan Ives raised his price target to $50, citing the company's strong performance in the AI market. We'll find out if this happens at all through the rest of 2024. Now, let's put this meteoric rise into perspective. Palantir has skyrocketed about 160% this year alone. If you zoom out a bit more, it's up a mind-boggling 635% from its all-time low in December 2022. And for those early birds who got in at the IPO price of $10, they're sitting on a crushing 335% gain. No wonder Palantir is the darling of financial influencers everywhere. But here's where Palantir interests me as a trend follower. Palantir is on the verge of breaking out of a 4-year consolidation. For those new to investing, many stocks often stay in a sideways pattern after their IPO before making their first major move up. If Palantir breaks out and sets new record highs, we could be looking at the start of its first significant uptrend. We're talking potential targets of $100 per share in the next 12 to 18 months. As a trend follower, that is what I'm looking for. Now, let's dive a bit deeper into why this potential breakout is so significant. When a stock consolidates for an extended period, it's often building a base. Think of it like a springboard. The longer and more stable the base, the higher the potential jump. In Palantir's case, this 4-year consolidation could be setting the stage for a massive move up. So, the million-dollar question, is now the right time to buy? Well, it depends on when you got in. If you bought at the IPO in 2020, you're definitely in the green. Bought near the peak in 2021, you're almost at break even. And if you're one of the lucky few who scooped up shares at the 2022 bottom, well, you're probably grinning from ear to ear right now. But what if you're on the sidelines watching this stock climb higher and higher? Should you jump in now and ride the wave? Here's my take. With Palantir just 3.5% away from its all-time high, I'm saying a firm no for now. All-time highs often act as strong resistance levels. We could see the stock price bounce off this level and potentially swing back down to around $30 or even lower. That's a key level to watch. Now, I know there are Palantir diehards out there who might be shaking their heads thinking I'm totally off base. They might say, you're no investor if you can't see that Palantir is only going up from here. But here's the thing, real investing isn't about certainties, it's about probabilities. Until Palantir confirms a breakout and sets new record highs, there's always a chance it could reverse course. The current all-time high could act as a catalyst for a sharp pullback. There are simply no guarantees in the stock market. Look at stocks like Elf Beauty and Vistra Corp. They consolidated for 6 years before their first major uptrend. Patience is key in this game. It's worth noting that Elf Beauty, for example, saw its stock price increase by over 300% once it finally broke out of its consolidation. This illustrates the potential reward for those who wait for confirmed breakouts. That being said, With the world in the midst of an AI revolution, Palantir is perfectly positioned to benefit. Its deep ties to the US government and its recent inclusion in the S&P 500 could provide the fuel needed to break out of this 4-year consolidation and start its first major uptrend. Palantir's AI capabilities are particularly noteworthy. Their artificial intelligence platform is being adopted across various sectors, from finance to healthcare. This positions them at the forefront of the AI boom, which some analysts predict could be a $1.8 trillion market by 2030. If Palantir can capture even a small slice of this pie, it could mean significant growth for the company and its stock price. But here's the golden rule: let the stock dictate the breakout, never predict. Guessing and forming opinions have a very long history of getting people on the wrong side of the market. This is where our 4-phase sequence method, or 4PS method for short, comes in handy. Let's apply it to Palantir. Phase 1, identify a stock with a proven performance history. Palantir is relatively new and so has no major uptrends as yet, but its recent success and inclusion in the S&P 500 are promising signs. Phase 2, wait for a prolonged consolidation or base to form. Palantir has been consolidating for almost 4 years since its IPO. The longer the consolidation, the bigger the potential move when it eventually breaks out. This extended base building period could be setting the stage for a significant move up. Phase 3, confirm the breakout from that base. This is where we need to be cautious with Palantir. While it's showing signs of breaking out, we haven't seen a definitive move yet. We'd want to see a breakout and a close above its all-time high at $45 and even $50 to be confident Palantir is in its first major uptrend. Volume is also crucial here. We'd want to see above average volume accompanying the breakout to confirm strong buying interest. And finally, phase 4, enter the stock at the start of the next major uptrend. We might be nearing this phase with Palantir, but it needs confirmation by moving above its current all-time high and following a trend continuation pattern. Look for a series of higher highs and higher lows to confirm the uptrend is in place. Patience is key at this stage. As investors, we must ensure we're entering at the start of a confirmed uptrend rather than in the middle of the hype. Remember, if trends last 12 to 18 plus months, what's the rush? There's no harm in waiting to stack the odds in your favor when the stock does break out, as opposed to jumping in now and potentially holding a stock that could go nowhere if it doesn't break out. It's also worth considering the broader market context. The tech sector, particularly AI-related stocks, has been hot in 2024, but markets move in cycles and there's always the possibility of a sector rotation or a broader market pullback. By waiting for a potential breakout, you're letting the market prove itself rather than trying to predict its next move. For now, Palantir remains on my watch list, especially considering there are many other proven stocks already trending or setting up nicely. Stocks like Meta, Netflix, and Berkshire Hathaway are worth keeping an eye on as well. These companies have longer track records and have already demonstrated their ability to sustain long-term uptrends. Successful investing is about sticking to a disciplined, systematic approach that keeps emotions in check. FOMO, fear of missing out, can be a powerful force, but it's rarely a good reason to enter a position. Investors may be experiencing FOMO with Google, as it has dipped after a 40% gain. The current price seems to be at a discount, prompting many to consider buying based on FOMO. Watch this video on Google to see if it is setting up for a profitable opportunity that could add consistent returns to your portfolio.